Hi, in this video, I'm going to explain what is stock market to newbies like you and me. So let's begin now. What is stock market? Stock market, equity market or share market is a place where shares of publicly listed companies are traded. Stock markets are places where buyers and sellers meet to exchange equity shares of public corporations. A trade in the stock market is the transfer of a stock in exchange for money or security from a seller to a buyer. For this, the two parties need to agree on the price. Equities, stocks or shares, represent an ownership interest in a particular company. A stock market allows buyers and sellers of securities to meet, communicate, and transact. Markets allow prices to be determined for corporations' shares and serve as a parameter for the overall economy. As market participant compete in an open market, buyers and sellers are assured of fair pricing, high liquidity, and transparency. You may see news that the stock market is down or that the stock market is closed up or down for the day. Often this means that the stock market index has moved up or down, meaning that the stocks in the index have either gained or lost value. Investors buying and selling stocks hope to profit from this movement in stock prices. As of 2016, there are 60 stock exchanges in the world. 16 of these exchanges have a market capitalization of $1 trillion or more and account for 87% of the global market capitalization. Shares of many large companies are listed on stock exchanges. This makes the stock more liquid and therefore more attractive to many investors. Exchange can also act as a guarantee of settlement. These and other shares can also be traded over the counter (OTC) through a dealer. To attract international investors, some large companies will list their shares on more than one stock exchange in different countries. How the stock market works. When you buy stock in a public company, you are buying a small part of that company. The stock market operates through a network of exchanges. You may have heard of the Bombay Stock Exchange or the New York Stock Exchange if you are outside India. Companies list their shares on stock exchanges through a process called initial public offering or IPO. Investors buy shares that allow a company to raise money to expand its business. Investor can then buy and sell these shares among themselves. The company divides itself into several shares and sells some of those shares to the public at a price per share. To do this process, a company needs a marketplace where these shares can be sold, and this is achieved through the stock market. For example, there is a new internet company that decides to launch in the market. First, the company will promote itself to the big investors. If they think the company is good enough, they get the stock first while investing, and then they will sponsor the company's initial public offering or IPO. It launches the company on the official public stock market, where anyone who believes that the company can be profitable in the future can buy a share or stock of the company. By purchasing stock in companies, those investors become partial owners. These investments help the company to grow and expand their business. As the company becomes more profitable and more stock buyers will see the growth and start buying the stock. As the demand for this stock increases, the price of this stock also increases. As the price increases for buyers, the value of the company stock that investors already own increases. Also, when the company's growth slows down, the demand for that stock also goes down, so it affects the share price and hence the share price falls. Stock markets provide a safe and regulated environment where market participants can confidently trade stocks and other eligible financial instruments with zero operational risk. Operating according to defined rules set by the regulator, stock markets function as primary market and secondary market. History of the stock market. In the 1600s, Dutch East India Company launched hundreds of ships trade in gold, spices and silk around the world. Running such a large operation was not cheap, so to fund the expensive trips, company turned to citizens, individuals who can invest money to support the journey in exchange for share of the profits which their ships gonna make it. This practice allowed the company to undertake even larger trips, which increased profits for both themselves and their knowledgeable investors. By selling these shares on shipping ports across the continent, the Dutch East India Company inadvertently invented the world's first stock exchange. So, which is the largest stock exchange in the world? The New York Stock Exchange is the largest stock exchange in the world with an equity market capitalization of over 25.8 trillion US dollars as of June 2022. And video till the end. We hope you liked our video. If you like it, then subscribing to the channel will be like going beyond Mars. And I'm gonna catch you up in the next one.